It is one of the main sources of income for a business. And do you know how to record it? I'm Thomas Harwood and welcome to The Accounting Student, where we create free and short videos so that you can learn about accounting. Today's video is looking at how to record a revenue. Revenue can be defined as a monetary value received for the goods or services supplied by a business to the customers. If revenue is larger than expenses, then a profit is made. However, if revenue is less than expenses, then a loss is made. All the revenues of a business can be recorded into one large revenue account. Although this would make it easier and quicker to calculate the profit, it is more practical and helpful to provide T accounts for each type of revenue. Types of revenue accounts include rent receivable, commission receivable, bank interest receivable, other interest receivable, royalties receivable, and subscriptions receivable. Businesses have the choice to name each revenue account as they want. Let's now have a look at how revenue is treated in the accounts. The most important thing to remember is that income or revenue will always be on the credit side of a T account. Before we look at how to record a revenue, you should first know what a T account is and how to open a T account. You can learn about these two things in the links above. Cash of £350 has been received from B Fin for this month's rent. The money received can be identified as rent receivable, and therefore we will name the account rent receivable. This is also identified as revenue, and so we would enter the details on the credit side of the T account. Let's assume that the transaction took place on the 4th of June 2016, which can be shown as 4/6/16. Then we will note it as cash in the detail column because that is the name of the other accounts that has been affected during the transaction. And finally, 350 is entered in the pound column. Then yearly interest of £20 was received from the business's bank. The interest received can be identified as bank interest receivable, and therefore we will name the account bank interest receivable. This is also identified as revenue, and so we would enter the details on the credit side of the T account. Let's assume the transaction took place on the 17th of June 2016, which can be shown as 17/6/16. Then we will note it as bank in the detail column because that is the name of the other accounts that has been affected during the transaction. And finally, 20 is entered in the pound column. Then, at the end of the month, 5% commission was received for selling £1,000 of a particular good. First, we need to work out the actual amount received, which is £1,000 times by 5%, which equals £50. The money received can be identified as commission receivable, and therefore we will name the account commission receivable. This is also identified as revenue, and so we would enter the details on the credit side of the T account. Let's assume that the transaction took place on the 29th of June 2016, which can be shown as 29/6/16. Then we will note it as bank in the detail column because that is the name of the other accounts that has been affected during the transaction. And finally, 50 is entered in the pound column. So that was demonstrating how to record a revenue. If you enjoyed it, press the like button. If you have a question you want answered, leave it in the comments below and we'll try our best to answer it. And if you're not already subscribed, make sure you click the red subscribe button to keep updated with The Accounting Student. Thanks for watching, we'll see you next time.